Well, hello, folks. I'm Ellie Little, and this is your daily NeoTA wrap, where we take a look at these markets and we look at them from a neoclassical perspective each time. We ask ourselves what happened today and what does it tell us about the coming ones. I do this show 4 times a week. I do it Monday through Thursday, broadcast at or before 10 o'clock Eastern Time. Archived on YouTube. It's under the channel LA Little if you want to catch it there. Tonight we're going to first 10 minutes we'll talk about where we believe the market's going tomorrow, but then I'm going to talk a little bit more in depth about what these calls actually mean, how they're put together, what they tell us, because sometimes the market really becomes reasonably unpredictable in the sense that it doesn't do what the tape is trying to say it should do, and that's kind of the way I feel we're at now. This isn't the first time. It happens other times too. And when it does, you have to kind of take a different perspective. I want to talk about that. And then, of course, I want to dive in a little bit more about what this pullback looks like and where it may be going. Speaking of the pullback, here's the numbers. A big drop, NASDAQ on the index, 2.11. I actually wrote an article this morning about the bin gate. You can read it over here on the front page if you want. Apple and its problems. You know, Apple charges a premium for its products. If it's not seen as a premium company, it's going to be hard to get that premium going forward. And that's going to be a big issue if, in fact, that ends up being the case. And right now, Apple's kind of taking it on the chin. I think it's going to get worse before it gets better. But then again, I've seen stranger things where, you know, a stock like Apple, which is, either loved or hated, ends up finding a way to pull it out. There is no Steve Jobs anymore, so now it's up to Mr. Cook, and we'll see if he can actually do something. The last 2 times this has happened, you know, if you look back and you remember back about like the mapping programs that essentially were foolish in terms of what they mapped. All we got was an apology. It's going to take more an apology on what's happening here, I suspect, and it is definitely. It's a big negative for the company, in my opinion. So straight across the board, index is down big. Russell was actually down the least. That's because the Russell actually hit the lows today and got a bounce off of that. The others were in a free fall, and they have clearly, in my opinion, given direction finally, at least for the short term. And I'll talk about that here in a minute. Gold gets a bounce after the equity started selling off pretty hard. Bonds also collect a bid, and the dollar continued to bid higher, although that does look like a dark cloud on the candle, which means it's probably done what it's going to do. Let's pop over and look at these charts. In a nutshell, I can give you the summary right off the top. This market finally is going to go lower. It looked like that was the case. Then we got the takeaway bar yesterday. Well, today we get the takeaway of the takeaway plus more. And folks, this kind of action, when it starts to do this, is the sort of action that tells you that you've got some sort of a top taking place. You never know if that top is, just a short-term top, an intermediate, or a long-term. We'll talk about that a little bit more in depth as we get along here. But clearly, you break a swing point low, you finally convincingly break the swing point highs. This is going lower. It's coming into the big bar. Remember, as we were drifting down here before, we were talking about this being the target. Well, we missed that target by about $1 today. So it's going to try to get into that tomorrow. More volume there than there is on the way down right now. So we could get another little bounce here first. This, to me, is not an ABCD structure. I had a couple people ask me that today. And what I mean by it is, for an ABCD structure for me, is you got to come down, right? And then you got to get a higher high, higher low than the prior bar. And you didn't get that here. You got a lower low. So to me, this is just one A move still. It doesn't have a B point yet. If we get the bounce, right, that potentially sets up the B point and maybe get your sort of an ABCD structure going. Now, there's other ways to measure this, and we'll get in that in a little bit, but this clearly, finally, looks to be telling us down. Dow Jones, same sort of story. Dow Jones, blows out its lows. It's a takeaway of a takeaway as well. And let me see here, did I click on it? Yeah, it's a takeaway of a takeaway as well. And it also convincingly broke the retest regen zone. So you were trying to regenerate higher at the bottom of this previous swing point high. And I can pop it in here for a visual. Right, so that was the area. Clearly breaks it down. Also, it doesn't have a B point either. So right now you've just got an A point. This one, same target, July 31st highs. That's another, what is that, 16,869, and we closed at 16,945. So you got about another 80 points or so on that target. If we move over to the NASDAQ also basically a takeaway of a takeaway. Also breaks a swing point low, so you're getting swing point low breaks. That's transitioning trend now. So the trend no longer is the uptrend, but is instead sideways. So at this point here, you had a bullish trend, right? You broke two swing point highs here, bullish trend. Now you finally break a swing point low. That gives you a sideways trend. And in this particular case, it looks like it wants to try to come lower. Now, this one also first time back to a retest regen, and usually that's a very high probability buy. That low here is 44659. The other low over here is 4463, so about 4463 to 65. We got down to 4466. It's going to try to blow them out tomorrow. Has more volume as it's coming down, which means it can blow them out. So this will be probably the best indicator tomorrow as a result of where it is. But remember, you've got Dow about 80 points from what could be a bounce. You got the S&P a buck away. You've got this less than a couple bucks away. So you've got a lot of things here that could give you a small bounce. If it does, what does that do? Gives you the B point of an ABCD structure potentially to the downside. If you look at the one that really got hurt today, and a big part of this was Apple, large spike down. That low is 40.0998. You close at 07. That breaks it with volume. That's also a trend change, and it's also coming back in for the first time for a retest regen, which is a little bit lower. I would expect it's going to test it, and we'll see if it can hold. That kind of brings me, well, let me finish this, and then I'll come back to the thought of these tests. Because really the market is just a series of tests, and what we're doing, looking at those tests and saying, okay, what should happen, and does it? So when we got a takeaway bar yesterday, that should go higher. Did not. That tells you something larger is at work, and this thing is weaker than we thought. Remember, we'd already got the spike down, the push back up, and then we started breaking down again. We broke the range again, maybe not here, but we did on the others, which suggested we would go lower. Then what happened? It went higher. Now it should go higher. No, it goes lower. Folks, that's telling you this thing is in a bit of a confused state. The players not sure where to put their money, and the fact that it's reversed now in the direction of their original break suggests to me it's going to probably finally go the direction it wants to go, which is lower. The other one that really could get the bounce tomorrow is the Russell. Here's the Russell, comes into this low, doesn't have the volume, 378 there, the low is 1107, you get to 1107.51, and just missed it, so you didn't quite test it, you don't have quite as much volume. This should try to bounce tomorrow, but the fact that it didn't test says that it can test tomorrow, and I suspect it will test tomorrow. And so the real question won't be on the Russell. The real question will be on the other indexes, and what do they do? Do they break down, or do they hold those areas that they should try to bounce from? I bring up the Russell weekly right quick because we're coming back into a big danger zone. You got the swing point lows here, right? That would just be a break of a single swing point low on multiple time frames. But folks, there's a lot of swing point lows laying down here. And if they start to break, it's going to be a big issue. So on this chart, you can see the issues starting to pile up, and a break of those swing point lows is going to be a big problem for the Russell if in fact it happens. Big problem for the whole market. Remember, the Russell is negative on the year. It's negative by about 0.3 now. It never has really gotten going all year long. And if I pull over the monthly here, you can see what I'm talking about. Just sideways pretty much the whole month. So Russell, a very different story than everything else. I could walk through the rest of the indexes, world indexes. Almost all of them want to try to go a little bit lower at least. I could look at the sectors. They were the ones that were a little bit more mixed, suggesting down, because remember we had 4 of them transition trend. That was the true tell. The bounce yesterday wasn't. That was the pull the bulls back in on the buy the dip, and now flip around. We're going back the real way. If we look over to bonds rally, junk bonds sell off, gold gets a little bounce, but nothing big there. In general here, this market wants to go lower. That's the summary tonight. So takeaway of takeaways, and now I want to kind of segue into a different thing. A lot of times, the ideal here is that we're forecasting. And yes, in a way we are forecasting. We're saying, okay, this is what should happen. With the key word being should, right? Because the market is a series of tests. Nobody knows exactly what it's going to do. If they do, they're lying. Nobody knows for sure, even when the probabilities are high, because they're just probabilities. For example, that retest regen I said on the NASDAQ and the NDX, it was more than 6 bars. If you look back at the data, that's about a 82%er it should hold. Okay, so as it comes down in there, 8 out of 10 times it's going to hold. Well, there's 2 times it won't, right? And what you're looking for is to ask yourself, what should it do? And then what does it do? And if we just go back and review what has happened, here was the breakout. Breakout with volume. That should go higher. What does it do? It goes lower. That's the first tell that something's awry. And then not only do you go lower fast. Then you get down, and in this particular case, it didn't break anything, so it didn't suggest lower, but you got the takeaway bar, which says it should go higher. Elsewhere, we actually had some signals that we should go lower. If I pull up, actually not the NDX, but the NASDAQ, this one, as you can see, had gotten underneath there. That one looked like it was really going to try to go lower and try to test this. It didn't test it, did a takeaway bar. So the point here is that when you're looking at the market and you're looking at what should happen, then you see what does happen. That's how you derive the clues as to probably what's next. So when I say that this July 31st bar, we should get a bounce there, that's not a high probability, and I don't call it the probabilities on everything I say, or I'd be here all night, but that's not a high probability call. As you can see, the TA Today charts haven't even drawn that in as a support zone. So it's certainly not a high probability call. But it is a call that's saying to you that this market wants to try, if there is going to be buyers, there may be some here, but this market's going to try to make it down to the support zone. That's the next spot where we have some significant support. And until then, we don't. We just don't have the support until we get down there. So when you look at it from that perspective, that gives you a much better idea of what the market's telling you. So the fact that it's broken down here when it should have gone higher tells you it probably is really finally going that direction. We got the signal up here, we have a clear signal again here, and now we have trend transitions and breaks. Can we bounce? Yes. Will we bounce? Yeah, we may not. Not a high probability trade right here. If we do bounce, what does that do? Well, if it bounces and you get a higher high, higher low, in other words, you get 2 days of a bounce, then you could actually have an ABCD structure. This may tread lower, then get a big bounce, and then put an ABCD structure in. How that plays out, we can't tell. What we can tell is that now it has given us 2 clear signals to the downside, broken more support, done more damage. it's probably really going to go lower now. Now there's other things that we can use to measure. So when we get this kind of a signal, and we see this kind of a range breakout, right? Now we can start doing some other projections, and we can start asking ourselves, okay, how far can it go? Well, I only use two projection techniques. One is ranges, the other one is ABCD structures, nothing else. That's all I use. I try to keep it simple. If you look at the multitude of indicators that are out there, the vast majority give you just a different flavor of something you already have, probably. Excuse me. So why have them all? It's just too much to watch, too many things. Too much information is not good. You actually don't want that much. You want the least amount of information that gives you the most amount of, the least amount of data that gives you the most amount of information. You don't need but two projections, because almost one of these two will always be around to use. A range trade breakout, you measure top to bottom of the range, you project that same top to bottom of the range to the downside, and if I were doing this accurately, I would be doing a percentage based range, but the numbers are not that big here. When you get into smaller numbers, then it matters. And so you can just basically take the same range you projected down. Where does it project to? Well, in the case of the S&P, it projects to 1938. What does 1938 do? Get you right into the support zone that these charts have been telling us. Remember, I actually had folks asking me, why don't we have them up here? Why don't we have them here? Well, because there's just not good support there, right? And we didn't have good support. Remember, most of those support zones were a lot lower, and that was telling us 2, 3, 4 weeks ago that there was a lot of risk if this thing finally rolls, and I believe there is a lot of risk, and now you're starting to see that risk manifest itself. So we'll see if we get a bounce immediately. It's Friday, tomorrow's GDP, who knows? Maybe this thing just barrels on down. If you want to be a bull, the most extreme cases are the best places to make money. So if this just barreled straight down, you'd actually have a decent place to make a buy, because it would be so stretched that the buy point would be pretty good. The probabilities of a bounce, reversion to the mean sort of thing, would be higher. But all we can say right now, this thing wants to go lower. It finally is, I believe, giving us a valid signal. And I've been somewhat reluctant to call it the last few days, because this reversal up here was ugly. It shouldn't have done that, and then we got the takeaway, and now takeaway of the takeaway. Let's move to something else now. I want to cover one more general thought. I'm going to use the same charts, but now I'm going to flip to the weekly. And the reason for this is we just gave a projection on that daily and ask ourselves, okay, where could this thing go to? I want to look at those retraces that have taken place so far this year. And now we had one back here, right, since this leg began. We had one back here. The high on that was, and this is actually not this year, this was last year, September. So the high on September last year, 1730 roughly, and we got down as low as 1646. So 1730 minus 1646, that gets you about 114 points. And then if you go ahead and divide that by the 1730, you can get a percentage drop, and in this case it was about 6%. So the last time we had even a really good drop was a year ago, and it was this time of the year, 6%. That's the first one. Okay, where have we seen drops since then? Well, this one's so small I'm not even going to count it. But we had another one here from the January to February time frame this year. And that drop, and these are top to bottom, right? I mean, even if you were shorting this, you wouldn't catch most of this move, which makes it very hard to even play it. In other words, by the time you recognize it, just like now, you're already down 2.5%, 3%, right? It's almost too late. So here's the drop, 6%. So let's just draw those numbers in as we go here. So 6% on this one, roughly. Actually, it's about 6.5, so I'll put the 6.5 in. And then the next one is January, right? So the January drop, this January drop moved from, what is this? This is 1850 down to 1791, divide that out, that's about 6%. So 6% drop. So you got a 6.5, now you get a 6, right? So we go to the next one. Where does this one go? Well, this was March to April, right? Kind of a straightaway. And this was basically a 3-week drop. Here was about a 3-week drop. This was a 2-week drop. And the measurements on that one, top is roughly 1890. Was it 1898? I said 1897 actually. 1814. That gets you 4%. That's about a 4% drop. So you've got 8%, 6.5, 6, 4%, and this is on a 2-week. Right? This is basically 3, and this is basically 3. Now we go to the last one. The last one we had was right here. This was in the July-August time frame. This is basically a 2-week drop as well. And if you look at those numbers, those are going to come out to, I think, probably about 3-4%. So we get a high of 1991. The low is 1904. That's 87. That's about a little over 4% probably. So 4%. So what's the pattern here? Right? The pattern is less and less and less. Right? 2, 3, 3. So it's anywhere from 2 to 3 weeks drops. Anywhere from 6 to 4%. Where are we now? Well, if we take this high, 2019. Let's take that measurement that we had, which was what was it, 1938, and divide that out. I'll pull back to 1938 from this high. That would be about 4%. So if you look at this and say, okay, are we going to get the same sort of drop that we've had the last few drops, right? 4% does what? Takes us right back into the exact data point of this range trade breakout, right? This range trade breakout, if it breaks down and projects and gets us back to here, this area down here is the 4%, right, that we're talking about from all these projections on the weekly chart. Will that be enough? Don't know, because I think the big wild card is going to be the Russell, and I just, I don't want to harp on it too much, but that divergence, we've talked about it all year, it's still there. The divergence is huge, and those swing points are all lined up down there together. If they do start to break, I suspect 4% is not going to hold. We'll see. But right now, I think we finally got some clear signals. We're going to be under some pressure here for a while. Yes, we can bounce. We can bounce as early as tomorrow. But I don't think you want to play a bounce yet. You want to let this play out some. Folks, thanks for joining me. I hope you had a good week, and I will see you on Sunday. Have a great one. Take care.